Hello and welcome to the week ahead video. A couple of things to brief you on ahead. What is likely to be a relatively busy 5 days of trade. Starting off on Wednesday, we get the first clue on the US labour market with the ADP employment change, but unsurprisingly, much of the focus will be on the change in non-farm payrolls. Expected this Friday at 180,000, so quite the pickup from the just 74,000 we registered for the December reading. Now, much of the December fall was expectedly down to the weather effects in the late weeks of the month, and this may remain the case as we go through the January reading because, of course, we had those polar vortex conditions in the northeast seaboard over on the United States, so it could be worth bearing in mind as we're heading towards Friday's figure. Other than that, though, on Thursday we had the latest Bank of England rate decision. In line with forward guidance, no changes are expected from the MPC, with rates on hold at historic lows of 0.5%. This is as the unemployment rate does still remain above their forward guidance threshold of 7.0%, but only by 0.1 percentage points. And as such, Mark Carney is expected to give some clarification and a bit of a clue on the evolution of forward guidance as we head into the quarterly inflation report on February the 12th. So that's seen as the next flashpoint for UK monetary policy. However, the ECB rate decision also taking place on Thursday likely to take a lot more attention, as it's seen as a pretty even split between whether the ECB could move this week and ease policy further. So some see the ECB potentially cutting that main refi rate by around 10 basis points, so closer and closer towards zero. However, many have also seen that the ECB could take a step to end the sterilisation of their SMP programme, which would result in some easing, as those bonds would not be sterilised and would result in inflationary impetus in the euro area, following the very disappointing CPI estimate number we saw just last Friday, coming in at multi-month lows of 0.7%. But it is worth noting that the core CPI estimate actually came in line with expectations at 0.8%. So many analysts who do not see a change this Thursday said that 1 month print does not diverge away from the medium-term inflation expectations, and as such does not warrant any easing from the ECB. However, the tighter money market conditions that have been observed in the euro area have seen a lot of volatility over the past 2 months. Many see that as an impetus to ease further, so look out for that at Mario Draghi's press conference due this Thursday. Elsewhere, though, European earnings season picks up, where the US season slightly tails off. We have some key bank releases this week from the likes of UBS and Credit Suisse, alongside energy giant BP and telecoms giant in the UK, Vodafone. So of course we'll bring you all those releases as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Hope you have a fantastic 5 days.